Joining me now is Brendan Capstick from Nedbank Private Wealth to give us a take on the market's activity this afternoon. Brendan, thanks so much for your time today. And of course, in focus is Fed Chair Jerome Powell's speech coming up later this afternoon. Just walk me through some of your expectations there. We are, of course, expecting to hear further clues around monetary policy, as there's been expectations of even more cuts down the line.
Yeah, good afternoon. Thanks for having me. We will see further guidance from Fed Chair Powell. There's been movements there, and I think there's been creating a more aggressive stance on the cutting cycle. I think the market is pricing in a further 2 cuts before the end of the year. But as you earlier alluded to, I think that PCE number on Friday does, is an important data point to look forward to see where inflation is really coming in on the US front.
Of course, that being the Fed's preferred inflation gauge or measure of inflation. And just looking at everything else that's playing out this week, we got global growth numbers from the OECD. They've upgraded their forecast for global growth to 3.2%. from 2.9% for the year. The upgrade comes as the global economy performed better than expected in the first half, as we saw a lot of front loading taking place by a number of these big firms to try, or rather the front loading taking place ahead of the US tariffs kicking in. What did you make of, I guess, the outlook, that print that we got? And could we be underestimating the impact that the tariffs could have, considering that they now are in place and we are still waiting to see the impact it could still have on inflation?
No, 100%. I think you're spot on. I think we've seen a stronger growth numbers coming through, even through Europe.
Yeah.
Even locally, we're seeing strong growth numbers. And also US market, from a growth point of view, still holding up relatively strongly. Maybe there is a lag effect on a lot of these tariffs. We haven't received the China final tariff deal. I think that is quite important still, I think, from a global inflation and growth point of view as well. But I think all in all, if you look at what's happening from a growth point of view and from a rate cycle point of view, it's the market is looking through this possibly more on a positive base. Just locally, our leading in business cycle indicator came out this morning as well, also showing positive momentum on that, flagging new vehicle sales. So even on the local front, we are seeing stronger growth from a consumer point of view, also coming through locally.
And talking about what we've been seeing playing out here at home, even you look at data points like retail sales, where, sales are really surging, and it seems like households are proving to be resilient. It seems like, the lower inflation as well as those rate cuts are coming into play into the economy. And I want to then juxtaposition that with what we have been seeing playing out with the local currency, right? Many will say that the resilience we've been seeing in the currency is more of a dollar story than a story of what's been playing out here at home. It's currently sitting at around 17.30 to the dollar, really holding up well for the past week or so.
Yeah, I think we can't complain when the rand's strong, and there's a benefit for all of us. But I think on that front, you're right, and there is a bit of quite a bit of dollar weakness. I mean, at DXY, at that 97 level. So I think we're benefiting from that point of view. But if you look at our fixed income market, even our 10-year bond, the 2035 bond, I mean, those yields have been coming down. So international buyers coming into our market, and that supports the rand. We've had this strong commodity cycle with precious metals and gold, again up north of 1% respectively, platinum and gold today. Those gold shares just charging higher, and that creates momentum on the local front. But if you look at the other pairs on the pound and euro side, there has been some marginal strength. So again, I think global investors looking at our market saying, valuations are here. There's a commodity story as well, and of course we're entering most likely a rate cycle, hopefully before the end of the year.
It does seem like global investors are turning more positive on emerging market currencies, emerging markets in general, and that, of course, filtering through to South Africa. Let's move on to what's been playing out in the tech sector, Brendan. NVIDIA has been engaging in lots of deal-making activity, a lot of strategic partnerships. Not too long ago, we heard of that deal with Intel. Now we're hearing of the deal with OpenAI. NVIDIA committing about $100 billion. Market's really liking that deal. I think it closed at an all-time high yesterday. It is lower in pre-market, but I guess market's really liking the deal, right?
Yeah, I think you saw Nvidia again, as you mentioned, 4% yesterday on this announcement. $100 billion is a big number. If you compare the $5 billion that they committed to with Intel, as well, you saw the Oracle deal with OpenAI a while back. Also, large numbers that were announced there. Oracle was up yesterday 6%. So I think what we're seeing, there's strong demand still on these, the large language model demands and effectively the chip manufacturers. There's been a pivot from the hardware to the software world, and that's why you've seen these deals come through with the likes of Oracle as well. And CoreWeave. If you just look at some of these factors, there will be winners and losers because at some point capacity will get reached. So the likes of AMD and Broadcom, what does it mean for their contracts going forward? But all in all, I think equity markets, this is very good news. And you saw the Nasdaq and the S&P again printing all-time highs.
And I was about to ask you about that, some of the winners and losers, and if we're going to see some of the smaller companies also maybe engaging in some M&A activity or in a strategic partnerships of sorts, like an NVIDIA.
Yeah, very good point. I mean, like again, you've seen, some of the smaller players coming to the market. I mentioned CoreWeave. That's gone, entering the space. It's not only in the Mag 7. I think they're moving out to the 10. The market is saying what's going to happen with the remaining 490. I think where you need to look broadly is where the energy demand is going to come from. The demands on energy to generate this computing power could possibly be a next area where that broadening market play comes through on. But again, just need to be aware of some of these valuations on some of these tech names. Some of them are actually not making profits yet. The thematic can sometimes move ahead of it, but there is definitely new entrants into the market.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
PayPal, which technically is sort of somewhere between financial services and technology. It obviously fell from grace in sort of 2021. And my sense is, as so often is the case, there's nothing wrong really, I don't believe, with a company. We can discuss, the threats from, DeFi and crypto, although I think they are actually quite well placed there because I think that industry does need some guardrails. But to me, PayPal has got a really good franchise. New management, let's call them, focus is very much more on bottom line than just chasing numbers. Some interesting developments in the pipeline that I think can sustain them for a while. But the bottom line, coming back to the value argument, you're looking at a business that's probably going to deliver 12, 13, 14% earnings growth on a 12 multiple. So for something that is quasi-tech, technology or IT, but has a foot in the fit and serve camp, I think PayPal's looking unloved and unrewarded for what's actually been a fairly consistent job over an extended period of time.
My pick is a bit more obvious, but also in the tech space, Naspers. So it has performed incredibly well this year already, and is our preferred, entry point into an AI narrative for any given South African investor, and its exposure through Tencent in particular. The reason for that, and the reason I would choose that over Prosus, is that it is historically cheap relative to Prosus. So we saw in late 2023 a sort of secular narrowing in the wake of a corporate simplification process and a share buyback program announced on both of those. And it isn't since 2023 that we have seen Naspers at such a wide discount relative to Prosus. The discount to Tencent isn't as wide as it's been more recently, but just relative to Prosus, this looks like a very attractive entry point. And at the very least, I would be switching all of my Prosus exposure into Naspers at this level.
So Kwaba's going with a goodie on the JSE, Naspers, and Graham going all the way to the States with PayPal. Just your thoughts on those two counters.
Yeah, I'll touch on PayPal. We don't hold it for clients, but again, on a forward multiple of around 12, the market's around 23 times in the US and the S&P, and if you look at Visa peer group comparable, is if you look at that's trading at 26 times. So it does look cheap, but there's reasons for that. I think Apple Pay has taken some of their business away, as well as weaker revenue numbers in their previous print. So yeah, I think it does look cheap, but just probably not the best quality in that sector as a whole. One thing that PayPal does do that's very, very attractive is they've got the funding onto their platform, which they can convert cryptocurrency into traditional USD funding. And then Naspers, of course, it's a local favorite, probably widely held. I think it's that nearly 60% on a year-to-date basis. Of course, they've announced this 5-to-1 share split playing out around the 3rd of October. So quite a bit of tailwinds on that name. Tencent's done well. The gaming business on the Tencent's still looking really good. Trading at a discount of 40% to net asset value to the group level. And then, of course, the discount between Naspers and Prosus also historically wide at this point. So I like that idea on Naspers currently.
So you like the idea on Naspers, but that's not your stock pick. Where are you seeing opportunity at the moment, Brendan?
Yeah, we're going to go for Remgro today, a locally listed investment holding company. Of course, out with full year results today. EPS coming in around 38% in line with the guidance, so well guarded, in line with the expectations. Also announcing that special dividend, as you mentioned, most likely from disposals of BAT and that special dividend through Outsurance. So definitely trading at a discount to net asset value, intrinsic value around 40%. And if you're looking to get local exposure at a discount, and we've mentioned already a local environment improving, and hopefully the SARB comes to the party with a cut before the end of the year. Management's been also quite busy with unbundling of non-core assets. So we like Remgro at these levels.
All right, let's leave it there. Brendan, thanks so much for your time and taking us through trade this afternoon. Now that was Brendan Capstick from Nedbank Private Wealth.